Okay. Volume good. Air quality good. Mic, stand, distance from mouth good. What's going on, guys? Happy Monday. Welcome to the stream. Obe TA, where we take a look at the charts and apply, you know it, technical analysis. Additional technical analysis to try and find an opportunity to make some money. That's pretty much it, man. All right, so I'm not going to dilly-dally too much here. Hope you guys had a good day. Hope you had a good weekend. But, I mean, a lot of stuff continuing to go on in the markets. Let's dive into it, shall we? All right, so let's move it right into Bitcoin, man. Right off the gate, not playing around. So the daily candle that we just had, it closed about, hour and 14 minutes ago. This is my late night, right? Day job type stuff, but below, as we can see, this inflection point that we had back here from August 4th. All right, that golden zone right around the 618 retrace. Okay, so, I mean, you went through it like it was nothing, like it didn't even exist. Close below it. You're probably going to try and come up to get back above. It's what it looks like you're doing right now. But just closing a daily candle like that below, confirming the body there, it's just not good. All right, it implies breach of the support. It implies a move down to the next support. And I really don't see much. If we want to use the fib levels, I guess we can, maybe for some local support, but there is no divergence or anything going on the daily. So if anything, maybe come down to the 886 at like 34.5. Realistically, based off of what the NASDAQ and stuff are doing, you're probably coming back down to this low that we had January 24th. All right, this wick low. To just come back and retest that and try and hold it again. If that fails, then yeah, like 30,000 is going to be the next stop, right? Confluent with the 1272 from the January 24th low. So we'll see, man, but not looking good in the stock market. Bitcoin follows the stock market. Follow it down to lower levels, and if Bitcoin follows the stock market, the alts will follow Bitcoin. Ipso facto, crypto going down if the stock market goes down, right?
Right.
Okay. Fun stuff to hear, but I mean, you can't be too surprised given what we've been talking about here, this double top kind of thing, right? Down, past the measured move of that at this point, but yeah, it's like it looked good. You wiped out the hidden bearish divergence on the daily, and then it just did nothing. Right? It just fizzled out and has dumped, and a lot of it just has to do with the uncertainty in the stock market. I was just reading not too long ago that, like, breaking news, Russia has declared like 2 sections of Ukraine as like independent Russian-controlled areas, and has moved troops into those areas of Ukraine. We've got the president saying that it seems imminent of an invasion. I know it was going back and forth for a while, but it seems the Ukraine president is also talking about how this should be grounds to label it an invasion. So that seems to be on. And with the way that the NASDAQ closed today, tomorrow really could be. If the market is waiting to price that in because it's happening after hours, you could literally see, like, stuff that we haven't seen since like the COVID crash. I'm talking like gaps. We're talking like gaps in especially tech, the overinflated assets, the growth assets. We're talking like gaps in almost everything. You could see like an 8 to 10% down day tomorrow on NASDAQ. And I'm not trying to be, I'm not trying to be dramatic just to be dramatic. That's just what it looks like is going on. And if that news is enough for us to declare, yep, that counts as an invasion, dude, the market tomorrow will go insane. And it will dump. So just be prepared for that. But keep an eye on crypto, right? It's 24/7. Maybe the news will react in crypto before it happens and on the NASDAQ. You could look at the futures and stuff to get a better idea of that. But yeah, Bitcoin closing below that level, likely heading down to 30,000, right? And even with that, I mean, if with the Wyckoff accumulation phase we've been talking about, right, kind of following in line here with what it, it looked like it was going to do, we needed to make a lower low than this one back here anyway, the selling climax. Needed to make a lower low than it anyway, which 30,000 made sense. But if the market does go into a recession, and the NASDAQ is very close. The futures are at like 19% down. So 20% is considered a bear market recession territory. So we're literally just like a percent away. Tomorrow could really be the day that just sends this thing past that 20% point and down into the actual recession. If we enter into a year-long recession, Bitcoin's not holding at 30. Okay, it will then enter into the recession type of scenario that I had back here. All right, this is like real bear market type of scenario. Just going off of what we saw back in 2017, right? This could be even worse given the reason for this recession coming in. All of the money that was printed over COVID, 40% of the dollars being printed in the last 2 years. It's like just ridiculous. And I get why it needed to be done. People needed help, and it could have been much worse if they did nothing. But it's like they can't do that anymore. They can't keep printing money and expect what we're seeing now, the inflation and everything, not to happen. So it's like if you're sitting around wondering like, well, when's it gonna pop? Dude, it's like popping now. This is like the telltale stuff of the bubble popping. But yeah, so I mean, last time it was like an 84% drawdown. This measured move stuff, I don't know if you can see it real great on the screen there, but this is like the measured move of the weekly head and shoulders kind of structure we were seeing after breaking the neckline. That sent it down to like 12,500, which was right around the 886 as well of from that major low that we had back here, right? From the, the COVID low, I believe. So from the COVID crash low, the 886 right down here around like 11,000, 12,360. And this is like real bear market like we saw back here kind of stuff. Which, given what the NASDAQ is showing, if the NASDAQ enters into a recession and the markets do, and I'm talking global too, because China's also, like, their real estate, they're on, like, no better off than we are. They're having a real estate crisis that happened with like Evergrande and everything like that. So it's just like global stuff is happening, and I find it pretty convenient that all of a sudden, a war is popping up in the midst of these financial crisis going on. I don't, not to be like conspiracy theory or anything, but it seems pretty correlated that it's either one of two things. It's either a distraction to keep people from looking at their own governments who have been implementing these horrible financial policies, or it's just opportunistic in the sense that the US is like weak right now because of how divided everyone is and inflation and all that stuff. So it's like, if there were a time when America looked weak to carry out a plan, now would kind of be it. I don't know, just speculating, but I don't think decisions this large are made just on a whim. There's definitely strategy and tactics and stuff behind it. So yeah, man, if it's considered an invasion, we're definitely seeing, major continuation of drawdowns, and the charts imply that as well, right? Hidden bearish divergence on pretty much everything except Bitcoin, but basically made just the same high as the one back here from January and then dumped and sold off. So rejection, in my opinion. So we'll see. Let's move it to, I want to take a look at the total market cap real quick, because this is where we never got it back above that high from January 14th. Right? Never got back above the 200-day moving average, treating the 50-day moving average as resistance at this point. Falling below This inflection point back here from September 20th, right back here. All right, so below major supports. If anybody's in here right now, let me know if the volume is too high. I'm always self-conscious about that now. But, yeah.
Okay.
The total crypto market cap likely heading down to around $1.5 trillion. And that's the next support down here. As far as regarding a couple supports that we had back here in March of 2021, August 4th of 2021. So that's the next level, as well as more recently at late January. So $1.5 trillion seems to be the next step. Below that, there is this inflection point back here from February 28th. That's right around 1.25 before heading down to this major low that we had back here in like July around $1 trillion. All right, and off the top, I mean, the market would have lost about 63%, 62.8% in crypto value. So if this is like the NASDAQ of crypto, or you know, S&P of crypto, you could certainly argue that it's in a bear market. If 20% is like the NASDAQ's bear, I'd probably say like 60% is like crypto's trigger. Maybe how volatile it is, but not good, man. So we'll see. You're not even oversold on the RSI on the daily. This thing down at what, like 34, so below neutral. Sellers usually are in control at that level, so it's just the hidden bearish divergence certainly just continuing to develop negative momentum, continuation of the downtrend, which implies another lower low, or at least revisiting the most recent low. So 1.5 is almost certain, in my opinion. Even this, like this little Bartley that you had close on the 4 hour, like a bat kind of M shape here, just doing nothing, no reaction. Pathetic. On the 4 hour, looking like it wants to get a little death cross locally there. So yeah, man, we'll see. Let's move it to Ethereum. Okay, Ethereum, we've been talked about it yesterday, but below that major support here, $2,661. Next stop, right around this peak, 2,420. Okay, back here. All right, the major inflection point there. Yeah, it'll come down there, and again, it might get some support, but there is no divergence or anything at this point. Negative momentum is still building. The context of everything, you know, regarding the 50 moving average as resistance, this upper trend line has been regarded as resistance since December 1st. All right, it's working on like its fifth touch at this point. Just bad, man. And come on down again to 2,000. Pattern completion zone of the bullish shark down here. And then maybe that, if things calm down, the overall narrative, Russia comes in again, Putin just gets on the mic and just like, psych! Not actually going to war, it's just kidding again. Just a military exercise. And I don't know. I don't know what it would take necessarily to fix the markets at this point. It would really take something like that. It would take the world leaders to just come out and be like, oh, we were just kidding. Things really aren't that bad. You know, we can print more money and keep it going. That's the only thing I could see keeping the markets from going into a recession. And they just don't really have that tool anymore. They used it up during COVID. You can't print 40% of all the bills that have ever been made in like a year, 2 years, and then just expect to be able to keep you use that card. You've got an extra 2 years, and now we're here to pay the piper, I guess, right? So unless they pull it out of their pocket and just blow a ton more money in here and just kick it down another year or two, like how long can you do that? It just makes the bubble bigger. It just makes the pop worse. We'll see, man. If anything, if you're going to be shorting, yeah, I mean, you could go ahead and short some stuff. There's no reason to be taking it long. really on anything, especially like right now. You want to at least wait to see what the Nasdaq's going to do tomorrow, because it could really be a bad day. 4 hour, nothing. Just broke that support, heading down to the next one at 2,420. All right. Look at Binance Coin. Oh, god dang. Similar kind of thing. Again, also, the hidden bearish divergence continuing to develop. You're not even oversold, like on a daily time frame. This could go much lower. You could go as low, you can get down into the 20s on the RSI, like you did back here, back in March, right? That was like the COVID crash, but yeah, you could certainly there's a lot of room for downside here. Next support's going to be down here at, what was that, 330? 337, and then below that, really? Nothing until like 260, 250 down here. Okay. And I want to sit here and say, there's a harmonic and there's we get excited. Sure. Do we have we even have a shark or anything? Too high up. Oh, actually. Yeah, it's a little too high up. I mean, there's like a bat or something, I'm sure, but or as of right now, move it to the weekly even. Negative momentum continuing to build again. It's like you had a tiny sliver of hope back here, January 31st, this bullish engulfing candle, kind of like a morning star. All right, getting back up towards the 50 moving average on the weekly. Momentum starting to shift back towards the upside. And at that point, painting hidden bullish divergence on the weekly time scale. Right? On that day, January 31st, there was some hope. And it immediately came up. And for the 3 weeks, that one did technically reject the 50 moving average, didn't get above it. Next week, rejected it. The week following that, rejected it. All right, so 21 days of rejecting the 50 moving average after you hadn't been below it since June of 2020. Okay, so major rejection going on. The hidden bullish divergence almost certainly will not play out, so that's pretty much gone. Really, unless truly they come out tomorrow and say we're turning the printer back on, we're going to pump 500 billion into the economy, and we're actually going to lower rates down to 0%.
Right.
This needs to go down lower. Finance coin, likely like 250. Okay, with this kind of stuff. This is almost kind of like a tweezer top as well. Similar to like what the Nasdaq did. So good, man. Let's take a look at. Let's get into the fun ones here. Let's take a look at Solana. All right, these ones that are just had amazing runs. Hey, how about some green lines for change? Am I right? Some green lines. Talking about green like candlesticks. You're talking about some gains in this type of market. Is that what you want?
Oh, do ya?
Right. We're looking at the charts right now, and it's like, and I'm asking it, right? I'm like, hey, do you got any of those green candles? Right? You got any green candles on you? And it's like, no. And I'm just like,
It'd be a lot cooler if you did.
right? It's just red stuff. Weekly, gross, 3 in a row, down below the 50 moving average. For the first time on Solana ever. You've never been below the 50 moving average on the week. Or, not old enough really for it to go back that far, but you've never been below it. And it's like, oh my god, we have hidden bullish divergence on the weekly, forming, happening, going out. Oh, yeah, all right, dude, cool. Have good luck with that. Have fun with it. All bad news bears, and that's how it's gonna be for a while. Yeah, man, it's looking like it potentially. But we can get an idea of areas to look for it to calm down. Like we're pretty certain it's gonna sell off down to these levels, and that's the thing. You want to have your levels set to take a look at it when it gets down there. Pretty much it. Because even though things look bad, you never know when the Fed and the global market makers are going to pull some wool over your eyes and move it or whatever. But and hey, if anybody in here, anybody comes across this and wants to short some stuff, potential areas to do that. But yeah, Solana back at this pathetic little peak that it had back here from July. All right, maybe it holds it in rallies, right? Maybe you do. Before just bonking on the upper trend line and heading down to the levels that make sense. Or just get down there. It is currently, though, testing that low from January 24th. As of right now, looks pretty pathetic. 4 hour, doing nothing. Just a little tiny, skinny, insignificant upper wick doji after a major red candle. Don't mean to be that harsh on the little guy, but like, god damn.
You are one pathetic loser.
Solana. That. Remember, it was the Cardano killer? Remember? Speaking of which, let's move to Cardano. Ugh. Absolutely disgusting. Where is it? Oh my god, I lost it. I have too many. Alright, look. I don't see any hope for Cardano. The only thing I can think that might hold it is what? This over here? This is what you want to talk about? These kind of conditions after falling below and closing below officially now for like the third day, fourth day, the dollar, that was the support on Cardano. So look, 62%, I mean, from this point, another 54%. There's no reason to be holding on to this whatsoever at all. I don't care how far down it is already. There's no support, man. And all you have to do is look at the weekly. There's literally nothing. This is not support at all. This is nothing. It's straight up. There was no selling. There was no accumulation. There was nothing. And you're below any of the wicks that would have maybe saved you. 200 week moving average starting to peak out a little bit here. Was a shy guy, but making himself known from February 7th. Forget, right? Who some of these assets are, but yeah. 54% downside to this peak down here, which is also confluent. 886 retrace from the low you had back in March of 2020. Alright, so that's the support line for Cardano. Throw that 200 moving average down there as well. Okay, that's pretty strong on the weekly. Take a look at it when it gets down there. Another 54% down. We enter into a real recession. I mean, you're coming down to lower levels, right? 11 cents, 15 cents, that kind of stuff. Got it. Take a look at Avalanche, see what it's doing. Same thing, right? Double shooting star. These are top. Now bearishly. There's 5 days on that. Let me take a look at the daily. It was a major red candle falling out of the golden zone support. Okay, this was a major support level, $73. This little peak from back here. Close to 618. So, I'm on down to the next support down here. This peak. Major peak back from February 10th, right in between the 786, the 886 from your low of January 22nd. All right, at like $60. Very likely where Avalanche is heading, which would be a further 13% before maybe getting some relief. Again, dude, we get like a gap down on the NASDAQ tomorrow, and it's wartime. You could literally see Avalanche go down. You could literally see it go down 14% in a day. You can see it go down 20% a day. Right? Just go back to its low from late January and just test that again. All right, all the way down at $54. Not crazy. If you see stocks falling 10, 15%, you're seeing cryptos, especially altcoins, Yeah, 20, 25% a day. I've seen it. I've seen it multiple times. But it's okay. Right? This is short-term kind of crap, even if it's for a year, whatever. Do I think the asset class itself is done for good? No. And what that basically just means is that lower prices, the opportunity start to present themselves, ready on the sides. If you do not have any dry powder on the sides, I suggest perhaps gifting some things around to have some, or start saving as well, especially if we go into a recession with the inflation going on. Yeah, you can see prices get much worse. Okay, so hard to buy stuff when it's up so high, but it's like it's probably gonna get worse before it gets better. So buy that can of bean, right? Get that bean dip. Stock up. I just bought a generator today. I'm ready, dude. I'm ready for the apocalypse.
Nice.
But let's take a look at the NASDAQ now. All right, and just right off the bat, got it in the little golden box here. All right, the death crawl on the daily. Okay, that's just one strong indicator of the potential death, hence the name death, as to what is going on here. Been below those two peaks now for a while, double topping, gapping up, gapping down, below the 200-day moving average on the weekly. Remember that bearish engulfing tweezer top off of the 50 moving average. So it's like the weekly plays out for weeks. Every week is one candle. So if we're getting follow through price action off something like that, we're talking downside for 3 or 4. Okay, 3 or 4 weeks of downside. A lot can happen in that time. So you would see some big candles off of some indicators like this. Especially if they say war, right? Markets don't like war. But, hey, the economy's doing bad. When in doubt, go to war.
Yeah, I've been immunized.
Been immunized. Okay. At the very least, down to 13. Let me get back to the weekly here, all right? So we can try and get targets. And we'll do it the same thing, man. We'll just go to the COVID low. Or to the high. All right, the 50% retrace, which is like a normal retrace. All right, puts you down around 11,400. Okay, the golden zone lines up almost perfectly with the 100 simple moving average on the weekly. This right here. So, yeah, that's probably where we're headed based off of what I'm seeing here. Okay, which is a further drawdown of the overall market of like 21 more percent. And off the top, that would be a total of about 34. Right? I mean, the COVID crash was how much? COVID crash was about 33. That was like a black swan event before they pumped trillions of dollars into the market. Okay, this is like inflation, longer term type stuff. It's not like a punch in the face kind of COVID thing. This is like dragging out. Kind of like what we had back here, right, in like 2000, like this kind of stuff. And it looks kind of similar, right? This looks kind of similar to the price action that we're getting up here, right? High coming up, rallying a little bit, but ultimately making a lower high. It's not just like a violent dump. Got that kind of signature similar to what we had back in 2008. Had the high, sold off, came up. This almost looks identical. This like little peak, I'd say we're like here. Right? I'd say it's like there. Kind of what it looks like. Lady, you're scaring us. Hope you like your Sloppy Joe's extra sloppy. Really mad. Get it?
Okay, this is up!
Alright, let's see. What was the drawdown on that? Yikes. 55%. 50% brings you down to a pretty real, look at this, right? This is a pretty real level of resistance that could act as support. These peaks from right here, size. Yeah. Hey, you could. That low, that's what? Anything? Right around the 786. We'll see. This is recession type stuff though. Okay. Down and meet the 200-day moving average. Or 200 week. Getting this is the weekly too. It's even worse. Now is certainly not the time to be buying assets, and I'm sure if you turn the TV on, you will see our liquidity is strong. We can weather any kind of. We had such a boom, and the influx of cash has allowed us to set aside a reserve. They'll say a bunch of crap, right? Because they just don't want people selling their stock. Right? They want you to buy so that they can get out and dump on you. That's the game, man. It's just winners and losers. A zero-sum game in this racket, I like to call it. And Bear Stearns back in 2007 would just go on CNN and be like, "Yeah, no, what are you talking about? We have 600 billion in cash liquidity. There's no chance. It's about the same as we had 2 years ago. It's even better than it was." So everybody, it's all just speculation, right? Everybody's just trying to spread fear, and it's like a snowball. Even in the end, he said that the reason Bear Stearns collapsed was because of the speculative rumors snowballing out of control, resulting in just like panic selling. It had nothing to do with the bad mortgages we were giving out. It had nothing to do with the subprime shit we were handing off on people. It was speculation. It was the traders. It's their fault. You can't trust these people as far as you can throw. So if you see these people, online on the talking about pumps to the moon and stuff, especially in crypto too. Or on CNN, these money guys, these Wall Street guys, don't buy it, dude. Don't buy it. Fool me once, shame on you. Fool me twice, shame on you. Shame's always on you. Alright. It's the NASDAQ. Let's take a look at Alibaba, because I know China, dude. If you're looking at China's market too, let's take a look at it real quick. Right. This is a site I like to use a lot. Finviz. It's very good for, one, you can just see the S&P 500. This is everything in the S&P 500. So you can see the market kind of in one place, divvied up by sectors, which sectors are outperforming, what are underperforming. Semiconductors and tech have been terrible lately. But you can also take a look at the world. And you look at that giant, disgusting red blotch over to the top right? China. Dude, their markets have been terrible too. So it's just like, it's not just America, right? It's just a global thing, and they're blaming it on Corona, even though their own housing market is crumbling right now with Evergrande and all that stuff happening. They'll never tell you that, right? They'll tell you, they always do that. They blame it on something else that doesn't fall on them. If the blame falls on them, then the people, there's a risk of them revolting and turning on you, right? And they don't want that, so they got to shift the blame on everybody but themselves. But yeah, terrible day for China as well. Alibaba being like the biggest by market cap company in that country. Just look at it, man. Horrible stuff. In a downtrend. October of 2020. Below the 200 moving average all this time, just treating the 50 as resistance, gapping down. It caught support at this peak back here from September of 2016. So yeah, Alibaba right now is about the same price as it was back in September of 2016. You understand what I'm saying? This is the Amazon of China. So it's at a strong support, but they're there. Take a look at the week. Look at this classic distribution. Textbook Wyckoff distribution type stuff. The sell-off. Who knows when the selling climax will happen? Hasn't happened yet. And it's holding this peak. And what we can do from there. Fibonacci from below the supports. Also right at the 886. At the deep retrace area, if it were to fall any lower and break this support, yeah, it's heading down to like $84, 85 bucks. All right, that's the next support. So on the weekly lights, I have actually some bullish divergence on the weekly. Again, I'm not advocating to touch any stocks right now, especially ones with crumbling housing markets, but yeah, I mean, they're getting Class A bullish divergence that has been developing on the weekly at support, but it's like it's been developing, right? But it's not doing anything. Kind of going sideways, treating prior supports as resistance. Talking about back here from December over here. All right, so treating it as resistance now.
Okay.
We want you to invest in it. Yep. That's what they're saying. People are looking at the Chinese government right now, and they're like, we don't really want to invest in Alibaba. It looks pretty bad, and they're just turning right back at them. And
it'd be a lot cooler if you did.
That's Xi Jinping right there.
It'd be a lot cooler if you did.
Okay. But we will not listening to weekly death cross happen back in December on the weekly time frame. Good God. Showing some support is the thing. Like, it is showing some support. Double bottom type stuff with the divergence on the daily. But the overall narrative is just this. Tell you what, if things weren't as bad as they look right now, this is at like a perfect spot for potential long. It's just unfortunate that the fundamentals behind the world right now are not good, so it's just too risky, my opinion. Let's move it to Ford. Let's move it back to Merca here.
Object to the test!
Look at the bottom of the channel that it's been in since March of 2020, since the COVID crash. 200-day moving average down there. Still hanging on, man. Hanging on. Doing good. I mean, I don't know if I would say doing good, but still on the channel. That's nice.
Nice!
Alright, trying. It's giving its best effort. But, again, if the NASDAQ dumps, like, the market's going, man. If we go into a real recession, Ford will go down. Everything except, like, gold, commodities. And we're going to take a look at one of the major outperformers, lean hog. Alright, them porkers, the pigs, the bacon, performing very well. Coffee is at its highest prices. Oil, soybeans. Things you can actually like hold, right? You won't actually hold them by buying them in this environment for what I'm talking about, but you can invest in them. Corn, wheat, silver, and gold have just been great. Defensive stocks, as far as Dollar Tree, stuff like that, things that do well in the recession type period. Ford might be okay. No one's really going to be buying new cars in a recession. And it's like, if we do get involved in a war with Russia, I don't know if we would, but if we do, it's like, kind of makes all our stuff. They make all our stuff. They make all our phones. Everything is like made in China. So it's like, we'd be conflicting with our biggest supplier, which would just make prices go even higher. So it's just like, they kind of got us by the you-know-whats.
Oh my God.
Saying, man. Yeah, okay, Ford. Divergence, not really. Pretty weak. Look at the monthly, just cause. The monthly, like no bearish divergence or anything, which is cool. Pretty in this level that was once support back here in 1998. That's pretty cool to say. As resistance, it's fine. I had an amazing run all this time. Okay. And the monthly, potentially golden grossing. So who knows? Maybe while everything else is dumping and dying, maybe Ford goes nuts and has a great, awesome. Tomorrow was also, I just noticed, 2/22/2022. First time, that's pretty nice. Pretty interesting. What was the last one? 1/11. 2011? Work. What would be the next one? Sucks, man. If things look better, this is definitely the place you'd be looking to purchase for. But I can't in good faith with what I'm seeing on the NASDAQ and everything. I cannot in good faith touch stocks right now. Any of them, even if they're looking kind of good on technically. Unfortunate. Home Depot, same thing, at like a major support, right? This peak back here, right? 200-day moving average right down here. Bullish divergence has been going on. Back testing the spring that we had January 24th, this massive bullish engulfing candle. I believe it was, let me guess, it was at a harmonic too, right? 786. From that. What about this? No. But still, it was so good back here, and now it's just not bad. But the overall conditions. If you wanted to take it, let's just do this, right? If you want to take a position on Home Depot, it's the easiest stop in the world. You could just get in, stop loss, right about here, okay, right below this support, and your first target would right up here. What is that? 4.72. Even if we just need 3-to-1 odds, right? We don't want to be greedy here. Move it down to the 3 point, which gets you almost perfectly. With this little support we had back here, that's the range we're looking at. You got a 3-to-1 move here. Sure, you want to play for a 5% swing on Home Depot in the midst of all this crap, go for it. All right, it's easy stop loss. You're risking 1.66% or 5% gain. Fun stuff, especially compared to crypto, 5% snooze fest. But this is an area that you would expect. Backtest if it held. I don't even know why I'm going to the. We're not going to do that, but you're feeling squirrely. There you go. 1.66% risk, 5% gain. Happy? Don't say I didn't do anything for you. Let's look at Lean Hogs futures. All right, let's look at this beautiful asset. Gapping up. When was that? February 14th, gapped up 13%. All right, then that bacon is getting expensive. And that's what you need to consider. I don't know if bacon comes from lean hogs. I'm not really sure. But let's say it does. If the price of a lean hog goes up, of a pig, this much, the pig now costs 13% more. That cost to the farmer and ultimately to the meat person, packer, whatever, will also go up on you, the consumer, when you buy it, right? They're not just going to take the loss. They have to increase their prices to pay for the pigs that they have to pay more for. Okay, so we move it into commodities. All right, we're just looking at the top gainers here. As these things go up, the prices will also go up because it costs more for distributors to buy the supply that they sell to you. You're the consumer. They need to buy this stuff, like crude oil, going up. What's this one? There's the lean hogs, gapped up, dude. Bacon's about to get Super expensive. Ham. Honey ham. No thanks. I'll have turkey. I'm not made of money, you know? What's this? Orange juice? Orange juice. What are you doing? My indicators go. There we go. Orange juice showing some weekly hidden bullish divergence. I'm sorry, daily. On the daily? The daily. At the 200 moving average? Hey, okay, all right. You want to invest in some orange juice futures? Continuation implied to the upside. If we can get maybe a couple more days of upward movement off of the 200-day moving average here at a peak. This support back here, November 16th, peak, right? Okay, as well as back here, June of 2020. Support back here from January 18th. All right, this is a major historical support line. Also traded here November of 2018. So there you go. You don't have to invest in stocks or crypto right now if they're looking scary. You can look elsewhere, man. And I'm pretty sure this is orange juice. Pretty sure. Oh, there you go. Your mimosas. Continuation to the upside implied, meaning orange juice will be more expensive, meaning your mimosas at your brunch going to be a little bit more expensive.
Okay.
Ladies and boyfriends that get dragged to those.
Nice.
But you go there because you know afterward.
Nice.
And let's be real, dude. All right, let's put down the facade for a sec. Brunch is cool. The boy loves breakfast. He likes orange juice. He loves coffee. Loves champagne. I like mimosa, dude. I like a mimosa. Yeah. Look at this, okay? At major support. Implying continuation. Keep it going. That's most commodities are gonna do that, man, in this type of stuff. Cotton. You will not be able to see very well.
Oh my god.
Anybody? No? Nobody's in here? I'm just talking to myself, goofing around. It's all good. Gap down. Doji. Bullish engulfing candle on the day for cotton future. Okay. Nice. Got soybean. All right. Highest point you've had. Good lord. You're making like since July of 2021. You're making multi-month moves here. Look at the monthly. Damn, dude. Ever since May of ever since the COVID crash, things been out there. About to golden cross on the monthly time scale. Very nice. Cool. Heading up here. It's at this peak. All right, it's at this peak right here. So it's at a pretty major resistance point before this dump that you had back in July of 08. Why did soybean dump? I don't know why soybean futures would have dumped during the housing crash, but if that's an indicator, then soybeans might. There's no have any kind of like bearish divergence back there. Oh my god. Yeah, look at this. Take a look at soybeans real quick. Just their divergence here. At a lower. Or wait, hold on. Okay, never mind. I mixed that up. Thought it was a higher high. Not a higher high. Lower high, so kind of convergence, but how overbought. Why were soybeans bought? February 8. They overbought right now? They're not even overbought on the weekly time scale like they were back there at that dump. So, and soybeans, who cares? Move it along. Corn. Also doing well. Major hidden bullish divergence from this low back here. April of 2020. All right. Good. Next stop for corn. Right up here. Get you some corn. Anything else? Once again, milk gapping up. Milk's gonna get more expensive. Live cattle just continuing its run up. Beef, okay. Beef gonna get more expensive. Bat that we had on soybean meal futures. That's it. All right, I'm done talking about commodities here. Take a look at the metals real quick. Touch this resistance, come back down, hold a support, right? That's what these do after rallying a lot. No bearish divergence. Slightly overbought. Maybe get a slight pullback here. Bearish divergence on the 4-hour forming. Okay, so again, maybe a slight pullback down to 1877 before holding it as support with the 50 moving average there. Running again. Okay. Yeah, broke that major resistance line from November 16th. 1877. Heading up to this resistance point from June 1st. That's it, man. Good. Getting bullish divergence. Playing out. Look at silver. Per day moving average, it's right at it, as well as this trend line that it's affecting since May 19th. So the major move on silver, besides the fact that you just broke this major inflection point from back here, okay, which is a really good sign, is to break this trend line. You break this trend line and the 200-day moving average, yeah, straight up to like 25 bucks for silver. Okay, and then it comes down, yup, holds the 200-day moving average, or holds this support as support again, and that upper trend line holds that as support instead of resistance. Yep, and then it really can continue. That's just that would be a really strong sign for silver to break literally where it currently is right now. Get above 2430, break above that, and then come back test that stuff as support. Really good for the long term move for silver. Absolutely. All right, dude, that's gonna do it. Pretty quiet in here today. I get it, man. There's no trades to be had. Everything's down. Paying attention. Crypto. Makes sense. I get it. But moving back to Bitcoin, ended on there. Again, not really doing much. Indecision below major support. Move to the shorter time frame, see if we're getting anything. Nope. Piercing pattern negated almost immediately on the 4-hour. Now, decision treating this as resistance. See what I'm talking about here? Move it in a little bit closer. So this upper wick, okay, this upper wick right here, what that's doing is that it came up, touched it, right, which what was support historically. It was support. It's on the daily time scale that we're looking here, but it was support over here, right? Major support, obvious support, inflection point for rallying. Okay, it is now treating it not as support anymore, but as 4-hour. We move to the hourly, we'll probably do better. Decision candle, doji. 3 hours ago, sold out of it, came up, dojied into it, then closed below it, and now red candle trying to bearishly engulf perhaps. Got 53 minutes. Decision down here. And a divergence to help you? Nope. Actually, yes, a little bit. But on an hourly time scale, we don't really care. Again, it could just be divergence that gets you up here again and rejects it before, dumping, something like that. Guys, all right. Sorry it wasn't more fun, but you gotta be honest with what you're seeing. The whole point of technical analysis. Start showing you something different. When you're doing this flag stuff and you're getting back above major supports and 200 moving averages and stuff like that, there's cause to be optimistic because you need certain things to happen, right? In hindsight, you can always look back and be like, oh, why didn't you know it was going to dump here? Because back here, you had broken the recent high, right? You'd wiped out the hidden bearish divergence on Bitcoin. So there was a good sign. There was a chance that could have been it, rallied. continued the uptrend, but didn't. Just didn't. Couldn't handle, you know, what was going on in the stock market, all that kind of stuff, and has sold off downside. Right, so now we are no longer bullish or in hopes of a reversal of the uptrend. Right, we're just hoping that 32 or 30 can hold and possibly be the bottom before rallying. Personally, I'd be okay with it coming down to 20 and down to these levels, so I could get a little bit more on the cheap, but that's also not really as fun, right? Going up, but hey, patience required. That's it. All right, I'm gonna get going, guys. Anybody who's in here, appreciate it. Anybody watching later, I hope this was helpful, informative, whatever it was. Join the Discord. Link is is in the chat there. Follow the Instagram, the Twitter, but the Discord is where I am more than anything else. Any questions you have, want to try and learn the stuff for yourself, I'm in there 24/7. Shoot it in there, ask a question. It's a good time, man. We mess around in there, talk about markets and anything we spot that looks good, bad, call it out. But yeah, that's gonna do it. Hit the like button, guys. The sub, as always, helps the channel out a lot. But I will be back on Wednesday. Till then, keep it real, keep it chill, keep it true and fair. Sure. But more important than that.
Right.
More important than anything, as always, keep it technical. All right, buddies.
Psych!
Nope.
Are you not entertained?